Hello, good morning. It's Wednesday, September 5th. I'm joined today by Steen Jakobsen. We are going to just take a look at some of the key market drivers. If we go straight to the first slide, we can just see some of the things that we're looking at today. There's no doubt that the EM currency stock and bond market weakness continue to attract a lot of focus in the market. We are seeing this fight for liquidity, and EM currencies and EM countries are on the receiving end of this at this stage. Also, Trump is expected to announce additional trade tariffs tomorrow, and that's keeping the market under pressure. We saw that in commodities yesterday. And then we have a Swedish election on Sunday, which Steen is just going to help us take us through. But just going back to the slide, you can see there's one we borrowed from Bloomberg TV this morning. It basically shows quite interestingly how the volatility gap is continuing to increase between EM for currency volatility and G7 volatility, and it's now the highest gap since 2007. So obviously it does indicate we may have some cracks appearing, and this calm that we're seeing may not continue. Just looking at this, I think there's no doubt that the key to this calm remains the US stock market. We've seen the continued move higher there, particularly driven by the Nasdaq. And we see the gap between the rest of the world has continued to widen because the whatever liquidity is left in the world, it seems to be moving to the US, into the stock market from Japan and from Europe. So I think, Steen, the first question really on the stocks, what should we be looking out for in the US stock market?
So I think you're absolutely right. Had Peter been here, he would have made aware of the fact that in the US we have the fact that the repatriation on the back of the tax reform is taking liquidity back home, and is actually doing it on sort of taking it away from the rest of the world. So being the reserve currency is always a fight between the US-based liquidity and the non-US-based liquidity in US dollar. And what we're going on here right now, as if we see the cracks and signs in terms of the emerging market, is clearly that the Federal Reserve is tightening monetary policy, but right now it's not impacting the US market directly. What it is impacting, however, of course, is the rest of the world, which have debt denominated in US dollars. So that's the slowdown we see. Yep. And as we talked about a number of times now, we do see there is a cyclical change that will be replacing this, which is that US growth and the repatriation will stop. But in terms of valuations, yesterday we got the second $1 trillion company. Of course, no surprise that being Amazon. But overall, what we've seen, and Peter has actually created a little model for this, as long as we have this trade tension, it is the country with the higher liquidity that will outperform the country with the less liquidity in an environment of rising marginal cost of capital.
And obviously we like very short words, and obviously we've gone from FANG to MAGA, and I think that shift is really because the social media side is starting to attract some attention. I think there's something going on there today, isn't there?
Yeah, so today we have yet another sort of Congress open hearing on the social media and its impact on the economy. And what's going on here is, I think, is vastly interesting because it comes on the back of the GDPR initiative we have in Europe. So now all of a sudden Americans are waking up to this fact that this social media and the way social media is constructed actually could be negative for democracy as a tool used. It's not only used in our part of the world, but even more so in Asia. So I think there'll be a big pushback. And you and I coming from the banking sector, I never have had a real job, but having been in this business, we know what regulation will do, and that is what is incoming to social media. Hence, as you say, last year we would talk about the FANGs. This year we are down to MAGA, and for those who are not totally on the top of this, MAGA, of course, represents Microsoft, Apple, Google, and Amazon as the outperformers, while social media, of course not, is going to disappear, and certainly there will be value in that space. But right now, it is seeing a huge amount of incoming regulation, and very much today at 9:30 U.S. centrally Eastern time in the U.S. 9:30, which I think is 3:30 our time. They will be on the Hill, and they will get grilled. I mean, this will be pretty nasty stuff going on.
So that's what we should be looking out for today in the stock market. I think just finishing off the EM theme, just take a look at this table here. It just gives you an idea about the kind of damage that's been done to a lot of these currencies this year. The Argentinian peso has lost half of its value. The Turkish lira down 43. But even if you look at Europe, Europe is down 3.5, and Swiss franc, which is one of the strongest currencies right now, is barely scraping even on the year against the dollar. So really, it has been a big dollar story so far this year. But I think we should also just move to our brother country across the narrow strait here to Sweden. We've got an election coming up on Sunday.
Yeah, and it's a big political event. There are some people in the market, primarily the Swedish counterparts we have, who are a bit concerned. They see this combination of a very dovish risk bank with an incoming political situation, which is going to be a split parliament. Will this political uncertainty spill over into the marketplace? I will say we actually have experience with a government not being put in place for a year or two in the case of both Belgium and Spain. And we have to remember the political noise at that time was also that was going to be negative. Overall, actually, both the Belgian economy and the Spanish economy did significantly better without a ruling government. Maybe that's the lesson we need. We need less governments and more microeconomics and businesses to run the economy.
I think we could just look at the latest opinion poll, and that this basically highlight what Steen is saying here. We used to have two major blocks, red and blue, left and right. Now we've got the yellow popping up over there on the right with almost 20%, which is the
Swedish Democrats. And what I think is significant about the whole Swedish thing is that you have to remember the reason why Sweden is in trouble is not because the economy is bad, it's not because the stock market is underperforming, it's merely because of the politically correctness, in the sense that they became, I said it yesterday as well, they became so politically correct that they were forced to become unpolitically correct, in the sense that immigration was not allowed to be talked about. In Sweden, you could not even do profiling on immigrants, whether on age, race, ethnicity, and others. So you had an elephant in the room at all times over the last 2 decades being immigration. And also the fact is that there's been 1 million more Swedes over the last 13 years in a country of the starting base being 8, and there will be another million over the next 10 years according to the statistical bureau in Sweden. So this is a real issue. It's 20%. Sweden's foreign components, if we want to call that, is up at 20%. Well, if you live in London, that would not be a big deal, but in a relatively one-sided homogeneous society like the Swedish or the Danish or the Norwegian, this is a big change of flux. And in Sweden, samhället, which is a badly translated word for society, is everything. Sweden really believes in getting together, staying together, and confronting all of the bad things going on in the world. So Sweden is a superpower, not only humanitarian, but also economically. But they did fail to address the elephant in the room, and the failure of that means that on Sunday, we're going to have a split parliament. But I think, personally, this politically will be very good for Sweden, because what is better than discussing the actual issues?
Yeah, exactly. So it's really an integration issue, but we can also just take a look at chart here, because it highlights what Steen is saying. There's been a lot of market uncertainty that's been driving the euro stock to I think almost record levels, and we're just seeing a little bit of buying in stock over the past few days here. So it seems like some of the nervousness is starting to evaporate. And the stock markets on the right, you can see it's almost back to the highest level since 2015. So it's not as if the economy is going badly, but it is. There's other things at play here. So so I really want to look out for. But just to highlight, we did an election special yesterday. You can find that on home.saxo. We'll put the link into the Facebook after the program. Let's just move on, finishing off with some of the other key drivers we saw yesterday in commodities. There was a bit of contagion risk spreading over from the emerging market weakness that we saw, and also the Trump tariffs. Just take a look at this. We saw silver basically race to the bottom. We against gold, it reached the highest in I think 23 years. And against the dollar, it reached a 2.5-year low. So silver has really been on the receiving end, because industrial metals were under pressure yesterday. Silver is half precious, half semi, and half industrial, and that's really the reason why it's coming down. And just take a look at oil as well. Just the final slide here. We had a false break above the trend line that we've been talking about for the past few days. Basically, it pumped up on the risk of a storm in the Gulf of Mexico, hurting production there. But as that started to evaporate, we saw the market sell off again, because this EM risk is also still playing its part on the oil market. So we are still this tug of war between supply and demand concerns, which we have concerns on both sides. Starting to run out of time, so let's just finish off the day with the calendar for today. I think the key really is still tomorrow's announcement, potential announcement by Donald Trump, that they will add another tariffs on an additional $200 billion worth of imports. But we do have some PMI, and obviously trade balance from the US this afternoon is interesting to watch, whether we're going to start to see some impact of this trade war. And then we've got Bank of Canada late in the afternoon, but so far no change is expected there. So we'll end it there. Thank you very much, Steen, and we'll be back again same time tomorrow. Thank you.